situation. You have 4 basic tabs up here. We're on the home page now. This one will take you to go look up records by address, by street, by parcel ID, or by legal lot information. This will take you into the Kauai.gov website itself, where all of our forms instructions are. We just on this week updated this page here. We put a couple announcements here for everybody on here. We do have people filing for home exemptions, and they haven't been here long enough to file N11s with the state of Hawaii. So we allow them in for a 1-year tentative home exemption as long as they provide us with their tax returns, originally by April 30th of this year, but we've now extended that to July 31st because of the federal change to the tax return, or excuse me, the tax filing deadline to July 15th. So we extended our, for those that have the tentative home exemption, they can provide us with tax returns by July 31st and stay in for the 2021 year. Otherwise, they'll fall off and they'd have to resubmit. We also have done something specifically to keep the elderly as safe as possible, because the majority of our low income exemptions that are additional exemptions to the home exemption are given to people on fixed income, typically Social Security. So what we decided this year was the administration decided that for everybody that already gained an additional low income exemption, which is an additional $120,000 added to your $160,000 for basic home exemption, we're going to roll all those people over into 2021 without having them need to reapply. So it has to be the same owner, same applicant. And so if I had Social Security income only last year and I qualified for this additional income, I do not have to reapply this year. We're going to roll my data over into the new year. Okay. The thresholds for low income is a gross income threshold, $77,700 for the Kauai median income, and $48,600 for a very low income tax credit. I'll explain this a little bit further, that one is an exemption and the other is a tax credit. They're 2 different things. What's interesting is that this threshold has increased by $10,000 in the last 3 years. So what's considered low income has really gone up.
Pam,
and we have go ahead.
Pam, this is Karen. I have a question.
Yeah.
This information that you're talking about right now, it's posted on what website?
www.kauaipropertytax.com.
Okay, thank you.
It's this one here, it's purple. The entire state uses this vendor for websites.
Okay.
So you can search any county under this. Okay. There's a quick link here to that low income exemption also, but you're also going to be able to get to it right here. And that's what's going to take me into my my PowerPoint now. So I'll come down here. Again, I can come back to this anytime you have a question. So let's go here. Whoops. I want to do that. We want to start the slideshow. Okay. So what this is basically talking about what we're offering for mostly residents. Let's see, can I get this out of the way here? There. For mostly residents of Kauai. And so what I just showed you is this page here, which is the new COVID update page. It also has the current 2020 tax rates here. And also you can get right into the law right here, this link here. Current tax relief programs that require an annual filing, okay? We just received about 101 new petitions to dedicate land to commercial farming. So that means people that have been in for 10 years already or are getting in for the first time to our agricultural dedication program. They had a July 1 deadline to submit their filings. What typically happens is we review the petitions, and if there's missing information, we write a letter asking for that additional information and give 2 more weeks to comply. At that point, we start our inspections of the farms and determine if the areas petitioned to be under use are the actual areas we find planted in the ground or fenced for pasture. The additional income exemption, as we spoke about, is one of the 2 programs we offer for low income. Anything related to low income must be applied for every year because income can change every year. And we'll go further into what these require later in the PowerPoint. A very low income tax credit. What's interesting about this in our review of the program, we may have 500 or so people who actually have an income threshold of $48,600 or less. That's gross income of all title holders on the property. That includes people who don't live on the property. So it's a little bit more restrictive. However, because they also are qualifying for the additional $120,000 exemption and the lowest tax rate, they may get a better deal with the exempted net taxable value than they would with 3% of their gross income. So we've had many, many people apply and qualify, but they're yet getting a better deal with just the low income exemption. And you can trust that our office is going to give them the better deal in all cases. And that's called Program 2. The home preservation tax limitation is fairly new. I believe it started in 2014. And it really was meant for people who lived on Honolulu Bay, who were just getting completely valued out of their property. So we have some thresholds for that, and we have about 10 people in the program now that are enjoying the ability to pay taxes without losing their homes. The long-term affordable rental program is one of our best programs, and many of the other counties are looking at this program because everybody's dealing with providing affordable housing to their own communities. The long-term affordable rental program started out very small and with good intention, but it's been completely overhauled over the last 14 years. And we started with maybe 48 people. We now have about 1,400 people. One of the best things new about the long-term affordable rental program is you can have an investment property, a property you do not live on, or your clients can have an investment property. And if they provide a 1 to 3 year lease at what we call an affordable rent based on bedroom size, they get the lowest tax rate, homestead, and they get an assessment cap on their property values from year to year. So that's another additional benefit, and also an incentive really to provide affordable housing. The claim for disaster relief is not currently used, but who knows, there's a hurricane coming. But it has been used most recently for the April 18 floods. So many people who had flooding on their property, damage to their property, filed a claim with us. It's kind of a misnomer that you're going to get a current year tax credit. There's all kinds of fancy math to do a prorated tax credit for the year that the flood occurred. So for instance, in the April 18 floods, it was in the year 18, but it was in the fiscal year 17. So it was the 17 taxes that were credited if they qualified. The tax on use survey was initiated in 2013. We completely overhauled our law, changed everything on how we assign a tax class, no longer by zoning, rather by the term actual use. So in order to facilitate the administration of that, we created a survey that we send out every time a property is transferred. for all new sales, asking the owner to attest to how the property is used, and that helps us to determine what the tax classification will be going forward. The annual income affidavit has been confused to mean that if I don't file Hawaii taxes, I don't have to provide any tax returns if I want a low income tax exemption. But the fact remains it's only for those who do not have to file income taxes anywhere in the world. They're now being required to get a statement from a tax preparer that is the case. They don't have to file. So again, that goes back to some of our elderly who are on Social Security and maybe don't have enough income to need to file taxes at all. That's what that one's for. This is a duplication. I'm sorry. How do I go back here? Let's see. I can't see. Yeah. This right here, claim for disaster relief, is a duplication of this one. I apologize. We still have members of our community who are assigned to combat zone or hazardous duty and it's usually for a year at a time. And we do give them an exemption for that year that they're not on Kauai and they are in that hazardous zone. My son's had to do that himself. These are one-time filings along with some other information. The basic home exemption, typically you file one time and it lasts in perpetuity as long as you occupy the home and qualify for the home exemption. If you do no longer qualify for the home exemption, it is on the onus of the owner to let us know through this notice of change of facts. If they move away and we discover that they have stopped qualifying for the home exemption, there is a penalty that is applied to the tax correction for those. So it's kind of better to let us know ahead of time. Changing of mail address comes on a form. We're taking more and more of these forms by email. All of these that you see on the right are all fillable online if they're forms. And so we do have a general email, rpassessment@kauai.gov, and many people are now sending in these forms that way, which is okay. A totally disabled veteran, he will fill out a form with us and we will send something to the Veterans Administration and they will verify that he is indeed considered totally disabled and he gains a full exemption on the property he lives on. Should he or she pass away, their spouses will also benefit from this exemption. The charitable and miscellaneous exemption has changed recently. You used to have to file every year, provide your 501(c) documents, evidence that you're considered charitable by the federal government. And if you're leasing to a charitable entity, we need the lease. And that recently changed so that if the lease is for a term of 3 to 5 years or 10 years, the charitable exemption will continue throughout the term of the lease until such time as we are made aware that the lease is no longer valid. Commercial alternative energy exemption is fairly new and it is now being used by solar farms, commercial solar farms, also entities that have leases for doing biofuel. And there are 2 selections for the commercial alternative energy exemption. After the first year of being in business, you provide us with your income and we take 10% of your income for the previous year to determine what your taxes are, or you can choose to exempt your land values. But when you make that decision, it is the final decision. It happens, you can't change your mind on that one. And I'll show you that in the law if you ask. The Kuleana tax exemption has been in place for a while. It was initiated by Jay Fafaro back in time. And the hardest part for this one has been the owners having to get some kind of chain of title from OHA It seems to be time consuming and there's usually a long wait, but it's also vetted by our county attorneys. And we did have a county attorney who was able to facilitate a little bit faster turnaround time, but that person is now gone. So we have about 9 of these currently in place. They pay no tax, and there are some vacant properties that have this. Low and moderate income housing exemption. Many people think this is only for large entities, for large corporations that create low and moderate income housing like we have throughout the island. But we also have small developers who buy individual homes or foreclosures. And for instance, Arc of Hawaii is one company, and they are able to get this exemption on individual single family or multifamily homes without being in a large project. The historic preservation dedication exemption is for historic homes that are currently listed on the Hawaii registry. Anybody have any questions so far? Well, before I continue.
I had one.
Okay.
The question was asked, if they convert their property TBR for at least 6 months, would they get any relief for doing that?
No, not at this time. We don't have any legislation. It works. I knew this question was going to come up multiple times, but the way it works is October 1, 2019 was the date of assessment for the 2020 year. The use of the property on October 1, 2019 is what the tax classification is set for the entire year. If they want to facilitate a change to that tax classification for the 2021 year, there are a bunch of hoops they have to jump through, and they are fairly permanent so that they would not go in and out of vacation rental use. And I'll get to that a little bit further down.
Okay,
I haven't heard anything from council yet as to what I'm sure they're getting bombarded by people, but we don't have anything from the legislators or the admin as to what they're planning to do on this.
Okay, here's another one. Since our public record compilation of exemptions is provided to us as a single number, is there a table of exemptions, credits together with corresponding exemption amounts?
So we began publishing the type of exemptions on the assessment notices in 2019. So now when you see your exemptions, let's see if I can find one here. I'm sorry, I'm going to go out of here so I can get to let's see, let's go to here. See if I can find one here. Let's just see if I can find one. See down here, we're starting to list them. So that's a basic home exemption. Is that what they mean? So if there was an income exemption, it would be listed separately here.
Actually, what I was looking for, Kim, is we get a single number on our compilation from HIS. So it might say total exemptions 192,000. And so is there a listing that says, you know, homeowner's exemption is $48,000, a low to moderate income exemption is 22,000, a veteran's exemption is blank amount, so that we can start to decipher or categorize exactly what might be included in that exemption amount for us as we look at our end of the public record.
Yes, so I can give you the numbers, but it's in the law. So it's written in the law. So in section 11, exemptions, each one of these will tell you the amount. But let me just tell you this. A basic home exemption is $120,000. That's for everybody under 60 years of age. when you file your home exemption, you'd give us your birth date. Our system automatically upgrades your exemption to 180,000 in your 61st year and 200,000 in your 71st year. So 160, 180, 200, those are all reflecting basic home exemptions. Any combination of that with an income exemption, you're adding 120,000 to that number. So 160 plus 120 is 280. 160 plus 180 is 240. Wait, 120 plus 180 is 300, excuse me. And 200 plus 120 is 320. So if you see those numbers, you know there's a low income exemption in there. The other, but those fall on and off. That 120 will fall on and off if they don't file for the income exemption every year. If you see a weird number, there are several things that could be in place. We have a safe room exemption, which is $40,000. Once you file for that, it's there for perpetuity. It stays forever. So my 160 plus my 40 would be 200. So you wouldn't be able to tell if I'm over 70 or if I'm under 60 and have a safe room exemption. It's kind of confusing. I guess I could, you know, it's just that if I gave you a list of the exemptions, I can't tell you what all the combined exemptions add up to for every scenario. Do you see what I'm saying?
Would that be, Kim, this is Karen. Would that be something that's on your tax site now that kind of separates the exemptions? No?
Well, in the law, it states what the exemptions are, and then on each form, it will state what the exemption is too.
All right, then one more question. Can you define the tax classification commercial home use?
Yes, I hate this term. I really don't like this term, but it was borrowed from Maui. We used Maui's definition. So here it is in 6.4, tax rate classifications. If I live on a property and I have more than one living unit on that property, whether it's under my roof or somewhere else on the property detached, or I have more than one use on my property, meaning I have it as my primary home and qualify for the home exemption, except when I'm gone for 3 months of the year, I throw it in the rental pool, or I TVR it, or I have a beauty shop downstairs, or I have a mechanic's garage out on the property, or some other use besides primary home, then I'm commercialized home use. And I'm going to get to this a little bit further, but people are highly slanted toward trying to get the lowest tax rate, 305. But when you do the math, if you have a rental on your property, and you can keep the low rent if you want to have a affordable rental on your property, but if your market rent is bringing you enough income that you really don't want to go to affordable, you're only paying $2 more per thousand in the commercialized home use category. So and I'll show you some math I do this constantly with people who call. If my rent is $2,000 a month and the affordable is $1,600, the difference is $400. Only about $17 of that is additional taxes for not having the homestead rate. So it's really a business decision on everybody's part. So when we get to commercialized home use down here, okay. Uses which are primarily commercial or industrial, such as importing, selling, refining projects, do not qualify for homestead class. Okay, then down here, the homestead class shall also include parcels that have for and been deemed a long-term affordable rental. Homestead shall mean properties which are used exclusively as the owner's principal residence, except as otherwise provided in this section, which means the LTL is, so my other unit or my other house is a long-term affordable, or both, all my houses are long-term affordable and I don't live there. I get homestead for that. Or I have a licensed daycare. If the property has multiple actual uses, it shall be classified with the highest tax rate unless it satisfies the criteria for commercialized home use. Okay, let's go to the rules. And come up here to where is it? Here, administrative rules on tax classification. And here's a better definition for commercialized home use.
Can you send me this information later on too?
Yeah, it's on the website.
Okay.
Commercialized home use is applicable to parcels utilized for multiple purposes, one of which is the taxpayer's principal resident as of the date of assessment, provided that the taxpayer has a home exemption. So if I didn't have a home exemption and I had a beauty shop on my property, I'm commercial tax rate. But if I have a home exemption, live on the property and have a beauty shop, I'm commercialized home use. Does that make sense?
It does. Thank you very much. And the question was prompted by we're citing a plethora of people that are claiming to be owner occupants and they're actually not living on the property in order to benefit from that exact situation. And that's where the impetus for the question came from. But I appreciate your time. Thank you very, very much.
My pleasure. I mean, I tell you, in my 23 years with the county, we're no longer just doing values every year. We are tax consultants. It's a little bit disconcerting.
Okay, I have one more question. Can you explain the online option to submit the forms?
Okay, so just to show you, for instance, I monitor two email accounts, mine, and then down here I have the real property assessment. And all of these people are submitting to me forms. So you can submit forms through RP assessment, which is right there on the front page of the website. Let's see, on the home page. It gives you the place to write for any tax questions and the place to write for any assessment questions right here. It's also found here. On this, I put announcements over here on the side, right here. So here's a quick link right to our email right there. Okay.
Thank you.
Okay, so now we're gonna go back to slideshow. Okay, where am I? Okay, so we did that. Let's go to the next one. Public utilities, safe room. We don't have very many safe room exemptions. Hey guys, if you were going to build a lawnmower shed or a tool shed or any other outbuilding on your property, you don't have to live there. You can have a $40,000 exemption every year if you retrofit that structure to be designed as a hurricane shelter. And that means minimum 8x8 size, independent foundation. So we have people that have a room under their house in their garage, but it has to have an independent foundation, an independent slab ceiling with ventilation, and a heavy steel gauge door that swings in. I don't know if you guys know Bobby Short, but he built one on his property in Kapa'a where Holly Kauai was going out of business, so he got split face hollow tile for half price, and he manufactured his own door. And I have pictures of his to show people as an example, and that qualifies for a $40,000 exemption. That's a safe room. I have had to turn down safe rooms where there is a masonry walk-in closet built into a very nice home, meant to be hidden in for a hurricane, but it didn't have an independent slab ceiling or ventilation. And so they didn't pass. And they also didn't have a heavy steel gauge door. That door can be removable. We're not requiring it that it sits there all the time. So if you want to do a master bedroom closet that way, you can put the heavy steel gauge door on when we inspect, and you can take it off and put a regular door if you want. That's okay. Okay, I want to point this out to you. We just pulled up an assessment notice to show you how the exemptions are now listed by type. What a lot of people fail to do is turn that assessment notice over. On the back page of the assessment notice, every year we update this stuff. So this is what the 2020 year back page looks like. It shows you all the really important dates to remember. And September 30th is always, and is still, even under COVID, our deadline for filing for exemptions. October 1 is still our date of assessment. And August 20th of the following year. So if your new buyers move here, number one, they probably wouldn't qualify for home exemption this year, I mean 2021, but they would for 2022 because they can bring us a Hawaii tax return. But they have to be in the property for 181 days as of October 1, 2020 to get a home exemption. And the bill that will reflect that home exemption will not happen until August 20th, 2021, if they filed this year. That's their first bill with the new home exemption reflected. So your buyers are going to pay a cycle 2 bill in February of 2021 that reflects the 2020 tax status. And I'm going to show you further how a buyer really benefits from buying a property that was previously held in an exemption in a homestead tax rate. Conversely, a buyer who intends to live in a house that he bought as a vacation rental will still have to finish paying those vacation rental taxes before he can get out of that tax class. And I'll show you that further down. Okay, this is that tax class survey that I told you about. Anytime you guys make a sale, we send these out quarterly. So they're going to come out to the new owner and we require them to return it to us. And it's changed over the time. It used to be a lot simpler. It's a lot busier now. I personally don't like it, but that's me. Whoops, let's go back. People who are going to be primary residents and nothing else, or people who are investors who are going to provide our community with long-term affordable rentals and not live in their house, or any combination of those two things, would be filling out this section here. If you have a house with an ADU downstairs or out back or a guest house and you want to leave it empty for your family, or you want to rent it market, or you want to TVR it, and you still live in your house, you get that. So TVR use, for our purposes, TVR use does not care how much money you're making or how little money you're making on your TVR, and we don't care how often you're TVRing. As long as you live on the property, you're going to pay the same rate as anybody who's doing something else on their property. It's not related to income. If you have, let's say, houses in Princeville that you're selling to investors and they're market renting them, they would be filling this part out here. And so on and so forth. Everything on the right-hand side is for non-owner occupants. Everything on the left-hand side has, or the first two sections of the left side has an owner occupied in there, and it's in red right there, so it's pretty clear. Residential investor, you can't choose. Residential investor is assigned to you if your property is over 2 million and it's not rented long-term. So that's kind of a misnomer that you as an owner have to check that, unless you're proud of your $2 million value or higher. That's okay. Okay, in this form, when we do want to change out of TVR class into something else or commercial class into something else, we have to fill another one of these forms out as well. And here is our criteria for change. And this is not very big, so let me see if I can get you a bigger one. Okay, so we developed this after we changed the law in 2012. So if you want to change your tax classification from TVR, you need to remove all TVR use on the property, all signage, which when you have a TVNC, planning requires that you put a sign out front, so you'd have to remove that. All advertisement, web addresses, websites, Craigslist, all of those, we check them all. We need an affidavit. That's a really important one, especially for a new buyer. An affidavit indicating the last prepaid or reserved booking of the use. So for instance, my buyer does not want a TVR, but when he bought the property, as our multiple listing service often says, he has to honor the bookings already in place. And this is in a normal year, not a COVID year. So if he has to honor bookings through March of 2021, then he would say that in the affidavit, and he would effectively change his tax class for 2022.
Kim, I have a question.
Yep.
This person asks, we see people setting up signs outside of their homes, inviting people in for worship. Does this make their home a common home use?
No, and we would not pay attention to that.
Well, the main thing is glad it's working.
And
Hold on just a second. Hold on just a second.
Sure.
Hey, John. Hi. Fred is surfing, and I'm in the middle of a presentation to Kauai Board of Realtors. But come in,
Okay,
just
well, I'm
open
glad it's working now.
Okay, that's my son-in-law. I'm sorry.
Oh, no problem.
Yeah, he just drove up on his motorcycle.
Okay.
Okay.
I have one more question here. And that was, I have an owner moving into his house that is currently being rented long-term and classified as such. He's moving in on September 1st. So can he change the class, or he has to wait until after the 180 days?
When you say he's moving in on, September 1st.
September 1st.
Yeah. So how long is the lease?
Dawn, you want to answer
Dawn,
that
you should
question?
unmute yourself, Dawn.
Sure. So he actually, it's being rented right now.
Right. But when does the
The
lease
tenants are in
end?
it now
When does the lease end?
on the 1st, September 1st, when he moves in.
Yeah. So yeah, he can't. Yeah. So he has to work on 2022.
Okay. All right. Thank you.
Okay. All right.
Okay. So sorry, that's a motorcycle in the background. It's an Italian motorcycle. Okay, so let's see. So we need, in some cases, because remember, this is an all-encompassing change of tax classification. So some people have a use permit from the planning department as to doing, let's say, a bicycle shop in a residential house. If they want to change from commercial to residential, they would have to get rid of this special use permit because it does typically run with the land, not the owner. Okay. Then we need proof of transient accommodations tax license. We need a cancellation from that. We did run into a situation with Rosewood, I believe, where there were several properties on different islands under the same license. The state tax department will allow you to go in and amend your tax license, keep the other properties that you want to continue TVRing under that license, and simply update the status, removing the one you want to change. And we just need to see that proof. And that's what I have here. And then a copy of your most recent GE tax filing, a new use survey, And then just to point out, should you miss the deadline, or let's say your transaction doesn't record until past the deadline and you want to appeal the tax classification, you can do that and bring us during our appeal period between December 1 and December 31 of every year. And you can bring in all of this evidence that is described above during that period, but you'd have to file an appeal. Okay, let's go back to the slideshow. Okay, here's our golden ticket. The golden ticket is the basic home exemption. It used to be just an exemption, but now it is so much more. The home exemption does require residential income tax filings. By the way, we are getting ready to tighten this up even further. You're going to have to be in the house for 270 days, and you're going to have to file. You're not going to get a year to give us tax returns. You're going to have to already have filed. So and that's something we're following Maui on, because we had some people who got the tentative home exemption and then sold, and so the new owner got the tax benefits of the guy who bought and sold. So it also lets the owner describe if they rent any portion of their property, and the number of living units on the parcel, how many dwellings and living units, and how often they rent. And then we do allow, for those of you who work from home in a bedroom, let's say, or an office, we do allow you to enter that you have a home office. And what the calculation is 25% of your total SFLA or less does not affect your homestead classification. As long as you are not advertising your home as your place of business, providing parking or signage on your home as your place of business. Let's see. We also, especially when we have people applying here and they don't have a local address, or they have a local PO box and not a situs address, we will vet that and look for other exemptions in other states. Once you have the home exemption, you have 160, 180, 200,000, depending on your age, but you also get a 3% cap on your value, and that happens in the second year. So today I applied for a home exemption. In 2021, my value is $100,000. Let's say in 2021, my value is $400,000, and my exemption reduces that down to $220,000 taxable value. In 2022, my value cannot go above 3% over 400,000, and it cannot go below 3% under 400,000. That is a fixed cap for everybody that has an exemption. If I add 1,000 square feet to my house after I've gotten into the cap program, the initial $400,000 will be capped, and then we will add the value of my 1,000 square feet for the next year's cap basis. Same is true with ag dedication. If I fall in or out of ag dedication, my cap is adjusted. The long-term affordable rental program is now available for non-owner occupants for additional living units and the lowest tax class, and includes assessment cap. For the historic preservation exemption, you have to have a home exemption in place. Also, for the home preservation tax limitation, you have to have a home exemption in place for at least 10 years. And we don't have this one anymore. I should take this one out. Okay, here is a low income exemption or low income tax credit. Whoops, sorry. See how it says program 1 and program 2? So what happens if you qualify down here? you're going to get this too. You're going to get the 120,000 and the half price solid waste fee. But what our software is going to do is it's going to take 3% of this and see if that tax bill is higher or lower than 3% of the tax bill with all this in place. And it's going to give you the better deal. When we did this form for this year, we had to go through the whole tax code, the federal tax code, because it got changed. And a lot of the fields that were filled out that we had set up a worksheet based upon had changed. So we had to change our worksheet. Let me show you that here. And there is a worksheet on the home preservation also, because the home preservation has an income threshold. So here it is. This is a worksheet to go through your tax returns and determine what your gross income is. And we use it if you don't. Okay, and so here, all of these references are after going through the new tax code. Okay, the long-term affordable, long-term affordable rental program. If you have a long-term affordable rental on the property you live on, or if you have a property that you don't live on and all living units are under a long-term affordable rental, you get the 3% cap on your value for that property and you get the lowest tax rate. These rents have been increasing very quickly in the last 4 or 5 years. They're based on bedroom count, and when we originally began this program in 2004, it backfired on us a lot because the affordable rents, quote unquote, were higher than what landlords were already charging. So the finance director at the time decided to create this extra column for paying utilities or not paying utilities. Recently added to this program for the benefit of families that have their family members living on the property, and maybe they're not getting any rent or they're getting very little rent. And they have to file this form every year. Well, their family members are not going to move away anytime soon, especially if they're not paying rent. So if you have a 1 to 3 year lease, maximum 3-year lease with the same tenant, you can file this 1 year and not have to refile for the next 2 years. We had 42 people in 2005, 2012, 685, and today 1484. So this is a good program. It's working. The totally disabled veterans exemption continues for a widowed spouse. That's kind of the most important thing. We had 125 of those given out this much value last year. Kuleana, there's about 9 of them. Home preservation, remember we talked about this. There's some criteria you got to get around. You have to have the homestead rate. You can't own any other property. You have to have had a home exemption for at least 10 years without a change in ownership. If there are multiple dwellings on the property, each dwelling must have an owner-occupant in it. And the net taxable assessed value has to exceed $750,000. So that means after your exemptions are applied, the value is still $750,000. And your income cannot be over $100,000. You can see that this is really catered and really customized for specific owners. We gave away a total of $58,794 in taxes to these people. There was only 1, 2, 3, 4, 5, 6 of them last year. Safe rooms, 64 of these we have in effect. This needs an architect's stamp on a plan. So we encourage people who are building new construction, if they're thinking about doing a safe room, the best time to do it is at the time they're already building something else, so that the architect's stamp is not an extra $250,000 or $300,000 just for the safe room. Let's see.
Kim,
Okay, yes,
this is Karen.
yes.
I have a question. Dedications. Mike Curtis, you want to jump in and ask the question?
Sure.
Mike?
When you're like, you get a 5-year dedication for homeowner, something like that. Within that dedication, if you change the use or sell it, then there's a recapture of the real property taxes back to the original dedication because it didn't meet its 5-year or 10-year dedication. Yeah.
Yes, and let me clarify that a little bit for you, because I know you've been around as long as I have, if not longer. We used to have what was called a home use dedication. That went away in 1999. That home use dedication was for properties that were zoned commercial. Let's say in La Hui, they had commercial zoning. And so we would have in the old days made them pay commercial taxes. But what they did is they dedicated their property to home use or their primary home for 10 years. And they couldn't sell or refi for 10 years. We got rid of that in 1999. The only dedication program we have left is the agricultural dedication program now. And those terms are 10 years or 20 years. And the problem with the agricultural dedication program as it's written in the law today is it's highly restrictive, intending to give benefits only to commercial farmers, not hobby farmers and not people who necessarily farm all day long and provide our community with vegetables at the markets. We've tried for 20 years to have ag working groups. We presented a whole overhaul of the law in 2008 to council, which was shelved. And I'm tasked currently with rewriting the ag dedication law because I want to get rid of 10 and 20 years, and I want to get rid of rollback taxes, and I want to let anybody in that has the evidence in the ground. But right now, there's no political will to change or overhaul it right now. So right now, if you commit yourself to farming commercially for 10 or 20 years, first of all, we're going to vet you a lot more strictly than we have in the past. We're going to want to see Schedule F profit and loss statements. We're going to want to know where your market is. We want to see evidence that the land is continuously tilled and weeded and processed and harvested. And we're going to put you in violation if any of that doesn't occur, and possibly make you pay rollback taxes plus concurrent penalties. So when you were talking about a 5-year dedication, that's only halfway into what our lowest term is, 10 years. So let's say you're in the 5th year of your dedication and you want to sell. We are going to require, and escrow is going to ask for it, the buyer to provide us a letter in writing indicating they intend to continue the use for the next 5 years, because the dedication runs with the land, not the owner. And if the buyer should decide they do not want to continue the agricultural dedication use, the escrow will withhold monies. They will ask us for a tentative rollback worksheet, and they will withhold monies from the proceeds of the sale to pay the rollback taxes to get the buyer out if they want. And the nasty part of that is the concurrent penalties. So if I'm in year 5, I'm going to pay the difference between the market value taxes and the dedicated taxes plus 10%. In year 4, I'm paying 20%. In year 3, 30%. In year 4, 40%. In year 1, or the first year of the dedication, I'm paying 50% penalty on those difference in taxes. If I'm in a 20-year dedication and I violate in year 15, I will pay 150% on one of those years of back taxes. It's really nasty. There is a provision in the law that if you are in the 9th or 19th year of your dedication, we cannot assess those rollback taxes. You're kind of free and clear in that last year, and that's written in the law.
Excuse me. So we could maybe help you get that legislation changed to be more fair to everybody?
We did have an ag working group. We went as far as having a county attorney do a spreadsheet of all the desired changes, which I'm working from. I've already done all the work in the law, slashing and burning it. And we are in the process of meeting now with how we present that to council. It's not going to happen this year. It's an election year. So I can only, at the best, hope that next year we can get it in front of council.
Okay, so the question is, can we help you? If we can help you, let us know. Thank you very much.
I will. Thanks, Mike.
Okay, Kim, can you kind of wrap up in a
Yeah.
few minutes?
I'm almost done. I don't care if you want to look at this or not, but I simply wanted to show you what happens when you sell a property, what happens to that buyer's taxes. I don't know if you care about that or not.
Go ahead.
So this is 12 examples of sale dates, okay? Well, they're actually recordation dates. These properties sold before the deadline to file for a new exemption. And these two sold after, or these, whoops, back. Okay, never mind. I'm not gonna bother with this because you want to wrap it up. So here we go. Here's a math I told you about. Why pick the homestead class versus the commercialized home use class? Well, 100,000 divided by 1,000 is 305. The other is 505. The difference in this example equates to 16.67 in taxes per month. So if you want to know, if you want to market rent versus long-term affordable rent, your extra living units on your property that you live on, do the math and figure out if it's worth it to market rent it. Same thing with TV. Most TVRs, they're already not paying $9.85. They're paying this because they live on the property. So they're already okay with this rate. So, and this PowerPoint can be made available so I can finish up. Okay, that's my last slide, I think. Oh, I got one more. Oh, there's the tax rates of all the counties and all the exemptions. And here's our information to get a hold of us. And I am done.
Okay, Fran McDonald, you had a question? Unmute yourself.
Yes, I have a property listed for sale that it appears to have been classified in the wrong zoning from 2005 to 2012. It's zoned R10. It's a vacant lot in Kalaheo. And from 2005 to 2012, and this was the same situation with the other property the family owned, it was zoned vacation rental and hotel resort. And they
Actually, we didn't, yeah, I'll just interrupt you for a second.
Sure.
We didn't have the vacation rental class until 2013. So what you're talking about is they had an apartment zoning class because of the R10 zoning.
Okay, I'm looking at your site at the
Yeah, they don't show the old classification.
No, it says vacation rental or hotel resort.
Yeah, and it didn't exist in 2012. 2005 through 2012, there was no such thing as a vacation rental. So
Okay.
what you're referring to is apartment class. Yes, R10 would be, the zoning would be apartment. We did used to tax on zoning. So in 2005 to 2012, if they were applying the apartment zoning to that vacant lot, that was correct. In 2013 and 14, we had to amend the law so that vacant properties zoned R10 could now be classified as residential. So they should have a residential class now.
They do. Thank you.
Okay.
Thank you for clarifying that. I didn't know whether that was something they needed to bring to your attention that it was
Yeah, no, I
incorrectly.
appreciate that, and I would like to have the webmaster fix the tax class for the years that didn't exist, but it's a little like pulling teeth. I'll try.
Thank you for clarifying that.
Anybody else have questions for Kim? I mean, God, Kim, we could stay here for a whole day just listening to the different classes and rates and use.
I'm retiring in March. I'm retiring March 2022.
I'll take advantage of it.
I can't wait.
Okay, you can stay on, and now you can close your computer. And Andrew Nguyen is our next speaker. He is with the Hawaii Association of Realtors. He's going to give us an update on standard forms and also on the legal COCOA hotline. So Andrew, you wanna?
Yeah, hi Karen. It's not letting me share my screen.
It's not? Okay, wait, let me find you.
I have one I'm doing video on and one I'm not, and the one that I'm not doing video on is the one I'm gonna share the screen from.
Okay, so which one is that? You're on 2?
I'm on the same account, but twice.
Okay, because I only show you one time in here. So
No, Karen, he has 2.
where is he?
The other one, okay, should I make your other one a co-host too? Okay,
Yeah.
there you go.
Okay, try
Perfect.
now. Technology, people.
There we go. Good afternoon, everyone. Thank you for having me. I promise I will not have nearly as many numbers as Kim just had. I didn't get into the law to talk about numbers. So I am the Hawaii Association of Realtors legal counsel. I do run the legal COCOA line, which is legal information for principal brokers and brokers in charge. So if you have a question on a legal topic, you can give me a call. I'll have the number at the end of this presentation. But I don't give legal advice. So you can't call me and say, hey, Andrew, I need help doing X, Y, and Z. Can you walk me through the exact steps? If you call and say, hey, Andrew, I'm having an issue with a tenant right now, I can give you some of the basic landlord tenant code, the guidelines, what's going on, but not so much in terms of walking you through, or I've been asked to represent people in court too. I don't do that. So I'm going to go through and kind of talk about the most frequently asked questions that I've been getting. This is a little COVID specific, but there are topics that are non-COVID as well. So just starting right off with COVID, the big issue has been property management. I think this is pretty universal across the whole state. And obviously the big issue is the eviction moratorium. It was just extended at towards the end of last week. To go until the end of August. So no evictions for non-payment of rents can happen until potentially September 1. We don't know. I don't know personally if it's going to be extended beyond that. I don't think the governor has really given any indications one way or the other. Related to the eviction moratorium is the emergency proclamation. So under the emergency proclamation, which is Hawaii Revised Statutes 127A, and then the part that covers rentals is 127A-30. If you're in a month-to-month tenancy, it cannot be terminated right now by the landlord for any reason. So if I was renting a place from Julian and I was on a month-to-month lease and Julian wants me out for whatever reason, he cannot terminate that month-to-month agreement. So if you guys have leases right now that are fixed term, so if it's a year long, it's supposed to end at July 31, and it would convert to a month-to-month after that, you may want to figure out if you're going to end that lease on July 31, you can sign a new fixed term lease then, because the fixed term leases can end, but the month-to-month tenancies cannot be ended by the landlord right now. On the other hand, if they're paying rent, they're having no issues, you're happy to let them go month-to-month, that's obviously up to your discretion, and that's what you guys do. And then I'll take that. There are 2 exceptions to ending month-to-month tenancies. And the first exemption is if this property sells. And I get a lot of calls about this. They say, hey, I'm about to put this property on the market. There are tenants in place and we want to get them out. We want to fix a few things up, or we just want to show the place without tenants. It's a lot of hassle to give that 48 hours notice. But the way the law works is you can get the tenant removed, but only once the sale is completed, and it's 45 days notice once the sale is completed. The other exception is if the owner or an immediate family member will be moving into the property. So say it's someone from the mainland, they own a property out on Kauai, they decide to move back to Kauai because they're trying to escape all the crazy cases out there, and obviously they need a place to quarantine, then they can get the tenant out, and again, it would be a 45 days notice. And I did want to say, if you guys have questions, you can put it in the chat. If you don't want people to know that you asked the question, you can message it privately to either Karen or me, and we won't reveal who said the question. You're also welcome to call me after this presentation's over. So transaction side, other than the property management side, can you show the property with tenants in place? And this is a very common question. And the emergency proclamation didn't change any of the rules in terms of the 48 hours notice and all these other kinds of the usual way of doing business and showing a place. But I do think we have to be really considerate of these tenants. If you're bringing in people, and I know that no one's doing this, but if you imagine an open house or you're bringing in a constant stream of people, the tenants have a right to be afraid of COVID being introduced to their home. If there's elderly people, immunocompromised people living in the home, they have a right to be concerned. So I think you really have to work with the tenants and figure out a good compromise with them. Maybe you can schedule them all in one day, and you'll get a cleaning crew to come in afterwards, or something along those lines. I don't know what the right solution is. It depends on every single tenant, depends on every owner, and it depends on what the realtors involved can offer both sides. And then for transactions, we did make the COVID amendment / addendum, and that's designed for the actual transactions. We made it back in March. I think it's maybe, I'm not going to say moot at this point, but I think we have a better idea of how business is going to move forward now in the current and post-COVID world, in terms of business haven't closed as much as we thought. Government offices haven't closed as much as we thought. When we made the form, we had a big concern that the Bureau of Conveyances were going to close, or at the very least become significantly slower, and things weren't going to be able to record properly or on time. That hasn't seemed to happen unless things get worse, much, much worse. I don't foresee that happening anytime soon. So it's still helpful, I think, if it's at least brought into some of the deals, or people can look at it to know that it does exist. And if something comes up later down the line, obviously you can use it in later. I have heard, and you guys can put it in the chat, or we can talk about it later. I've heard on the neighbor islands, more so than Oahu, appraisers have been having issues coming out and appraising the property. It's either taking a lot longer, or some of the appraisals have been out of whack. The numbers aren't what people are expecting. I'd be happy to hear more about that, because obviously appraisal issues do affect the contract. So it's something that I would like to be aware of. And then vacation rentals. Obviously, when all of these shelter in place happens, all of the vacation rentals were shut down statewide. That's just changed a little bit and being more allowed by the different county mayors rather than at a statewide level, but it TBD, and with the mandatory quarantine in place, not many visitors are visiting anyways. So that's enough about COVID for now. If you guys have more COVID questions, we can talk about that later, but I've definitely been talking COVID for the last 4 months, way more than enough. So the usual issues that come up, disclosure. So the seller's real property disclosure statement, you have to give the condo docs. We've heard of a lot of people having issues with associations in getting these documents. They're either, a lot of associations now are moving to these third-party websites where you deal with them entirely, and then you go on, you pay a bunch of money, the buyer or the seller pays a bunch of money to get these forms, and they turn out to be out of date. Then you have to go to the association anyways. I'm always trying to figure out a better way of working with them. I have reached out to a lot of the big the condominium association management companies like Associa, Hawaiiana, and kind of talking with them to see if there's anything we can do to make it a little bit easier. Also, the property condition, project information form that we have as a standard form, kind of working with them to see what happens, to make it a little easier for our members to help their clients out. And then one of the big things that happens, I think right now too with COVID, if these contract lengths are a lot longer, these escrow periods are longer, there's more opportunity for the condo docs to change during that escrow period. And how do you make sure that the the seller gets them and distributes them out to the buyer. Because anytime there's a change, that's material, it's potentially a material fact, that does give the buyer the ability to rescind the contract if they don't like what was changed, if assessments are going up, if they're going to do a new major repair on something that they wanted when they were to have available when they moved in. So it is very important to make sure you get changes in condo docs to the buyer on a very prompt basis. But I understand that these associations have also been a lot more difficult. And it's funny because these associations were also able to, put in new rules immediately when COVID came around. But I'm not going to express my opinion too much more on these condo associations. So the next issue that really comes up with these disclosures is it's when the buyer goes ahead and gets the inspection report. They pay some money to get the inspection report. The inspection report says 50 things are wrong with the property. And some of them are big issues. Some of them are small issues. Some of them are, there's some paint scuffs in one of the bedrooms. And then there's others where the roof has a leak or the plumbing's really clogged. There's different issues, right? There's the entire spectrum of minor issues and big issues. So the buyer comes and says, hey, seller, you need to fix all of these things. Well, once the seller becomes aware of items that are, the word is inconsistent with the seller's real property disclosure statement that they already gave, Hawaii Revised Statutes 508D says the seller shall give the buyer an amended disclosure statement. So if you had said if the seller had said in their SRPDS that the roof is in perfect condition, it's brand new, there's zero issues with it, the inspector goes through and finds that there's a major leak in the roof, the seller, and maybe it's not even the home inspector found it, maybe the seller went by the house, noticed the leak. The seller has a duty now to disclose that change to the buyer. And it is a shall, so the seller does have to do it, but there's another good benefit to doing it. It's that the amended disclosure statement also, it could have an easier timeline, a shorter timeline on how long the buyer can rescind versus when the buyer finds out. So I'll talk about that in a little bit. And then of course for our members, if you guys know that there's something inconsistent or contradictory to the SRPDS, so let's say the roof example, the seller, as far as the seller is aware, the roof is in perfect condition. You go by when the buyer comes to check out the place and you notice that there's a leak in the roof. Well, now you have a duty to disclose that. There are times where it's a shall and it's a may. We can get into that a little bit later. But just keep that in mind that if you do find something out that's inconsistent with the SRPDS, you should be, talking to your seller, alerting your seller, and if your seller is not willing to disclose it, you may need to disclose it to the buyer, or at least make someone aware of it, or because it could come back to bite you in the butt. So these are not disclosure issues anymore. I get a lot of questions about acceptance date, and I don't understand in some ways how this is still an issue in today's world with, electronic signatures and email. But I get a lot of calls where they say, hey, the other side signed the contract yesterday, but I just got it today. When is acceptance date? Well, acceptance date is when the other party actually knows. If I make an offer to buy your home, and you say yes in your head, or you say yes very quietly to yourself, I didn't know that you actually accepted my offer. So both sides have to be, both sides have to agree, and they have to let the other party know. So the contract isn't actually accepted until the other party knows. And like I said, in some ways, I don't understand how this still is an issue with docu-signing, but some of the calls do come about because it's either significantly elderly clients or they're out of the country or in different places that do make it a little bit more difficult. So I'm not saying that I don't understand it at all, but it does seem like it would be less of an issue nowadays with all of the digital signing. This was in the real estate bulletin, I guess the most recent one, about paying commissions to agents. And since you guys are all PBs, BICs, from my understanding, the payment to the agent has to go to the agent directly. It has to go to the licensed agent If you're paying commissions to anyone other than a licensed agent, you're paying someone who's not licensed to do real estate work. So if they set up an S corp because their accountant told them, hey, you can save a bunch of money on taxes if you get your payments to an S corp, they may be, that's, you know, from the agent's perspective, that's right. They will be saving a lot of money. From the broker's perspective, they have a duty to only pay it to the licensed agent. And S corps can't be licensed as real estate agents. So make sure, I've gotten a few calls once that real estate bulletin came out. They said, hey, is this right? And I said, yeah. And they, you know, the people who called said, oh man, I'm gonna have to completely change my billing situation. And the way they pay out their commissions. So keep that in mind, kind of take a look at how you're handling your payments of commissions out. Related to that, and I have gotten a few calls about this, I think with the downturn kind of nationwide on real estate. A lot of referral fees from the mainland right now. Those referral fees can be paid if they're licensed in another state. If they're not licensed, then they cannot get a referral fee. So if they're licensed in California, Washington, Nevada, Utah, you can pay them, but if they're not licensed, they let their license lapse, but they have a former client who's moving to Hawaii, you can't pay them. They're not licensed anymore. Then a common question that I think we're gonna have to revisit when the next time we revisit the purchase contract is E3. It goes with the inclusions, and it talks specifically about leased solar systems. It also goes into alarm systems, but let's keep it to solar for right now. That section is just for the non-owned systems. So whether that's a lease for the actual panels, is it a power purchase agreement? I understand there's a few other variations. That's when E3 applies, because that's where you're transferring the lease to someone new, to the new buyer. If it's an owned system, there's presumably no, potential for liens or other issues like that onto the property. So that's the difference. Make sure when you're taking a look at that you're only using that for the lease systems. If you want additional documents for an owned system, you can request that. You can make a special term from that, or under the disclosure law, they do have to disclose the last 3 power bills. So you can see some more information from there, or the buyer can see some information in there in terms of what the power bill is more realistically with the solar system. And then this is the number one question I get is the broker signature on page 14. I've talked about it before. There's 3 main purposes for that signature block on page 14 for the reviewing broker. The number one reason is for if the offer is being rejected and the person receiving the offer, so typically the seller in this situation, is refusing to sign it. So I, buyer, make an offer to seller, and say the property is $2 million. I make an offer for $1 million, and the seller just is going to flatly reject it. Says that's ridiculous. I don't even want to see that offer. Well, they're clearly rejecting it, but they're not signing off, or they're not indicating that rejection on the form on which the offer is made. So the broker has to do so in the place. That's what the Hawaii administrative rule says. So the broker has to go check off that the offer is rejected, and then sign off saying that the broker was the one to reject the offer, not the actual seller in that case. Other people we know have been using it for kind of a supervision of new agents, and there's other brokerage firms where they're very small. The broker is reviewing every single contract that comes before them, so they have no issue signing off on it. So it's really a tool. If it's not being used for the rejection, it's just a tool for the brokerage firm to do what they'd like with it. So kind of company policy. And then I talked about this briefly on the disclosure side in terms of I-4, where where the seller finds out new information, they need to release an amended disclosure statement. And so in that amended disclosure statement, I'll take a step back. When you give a disclosure statement, typically the buyer has 15 days to review it, in which time they can rescind. Well, if you put in a different timeline, instead of 15 days, if you put in 7 days, 3 days, you can also make that apply to amended disclosure statement. So the same thing applies now for amended disclosure statement. Say the buyer finds out something They say, hey, there's a leak in the roof. They tell the seller gives an amended disclosure statement. Well, there's 15 days from when the buyer discovered that they could rescind. But now if you give an amended disclosure statement, they could have 3 days, 5 days, 7 days. It limits the time that they have to rescind. So it gives a little bit more certainty for the seller. And like I said, the seller shall give an amended disclosure statement. It is a requirement that they have to give it. I know it's a confusing thing. We put it in the law. We put it in the form following the law as much as possible. We didn't write the law. It is confusing. And going back to the landlord-tenant issues that are non-COVID related, I don't know how big of an issue this has been on Kauai. It's been an issue here on Oahu to a pretty big extent. Medical marijuana in buildings. So the condo associations were set up with a cigarette smoking ban up through the 80s, 90s, early 2000s. And then, recently when medical marijuana became legal, people were smoking medical marijuana within their homes and in a condo. People complained and they said, well, it's a prescription, medical prescription. You have to give me a reasonable accommodation under the Americans with Disabilities Act. And so associations instead said, hey, rather than just banning cigarette smoking, we're going to ban smoking of all kinds to kind of get around this. And so they're saying now that instead of smoking, you have to consume the medical marijuana in a different way. I don't know how this is going to play out. These changes that have been happening for these smoking ban, all smoking bans rather than a cigarette smoking ban, it's happened within the last 5 years. I don't know that it's been challenged necessarily. So I think that's something we'll have to keep an eye on moving forward. The other big topic I get are assistance animals. I get calls saying, how do I verify that this is an assistance animal, either a emotional support animal or a service animal? So that again falls under the Americans with Disabilities Act. For the service animal, if the disability is readily apparent, if they're blind, if they have mobility issues, it's pretty plain that they have a disability that they need this service animal for. You can't ask for proof. You can't be like, I need proof that you're missing your legs or something along those lines. If it's apparent, you can't ask for that. But for the emotional support animal, you can ask for a letter from a medical provider. So it's a doctor, it's like psychiatrist, psychologist, and licensed clinical social worker. So they can give you a letter saying they need this emotional support animal for X, Y, or Z reason. And you generally have to allow them. They have to be allowed under a reasonable accommodation. So even if the building's pet free, they have to be allowed. There are a few nuances to it. If the animal is a danger to property, other people, then you could say that specific animal, we're not going to allow it in the property anymore. If it's been biting people or other animals, or it's been causing significant damage to the property, then that's when you can ban a specific animal, but then that person could then potentially get a new assistance animal that would replace that one. I like to bring this one up when I talk to PBs, BICs, personal transactions. So I know pretty much everyone understands that when one of your agents goes out and is buying or selling a property, you're supervising that person because they're a licensed real estate agent. You're their supervising broker. You have to review their activities. When they're renting out their property, you have to supervise the way that they're acting as a landlord. When they get money coming in, it should be going through your client trust account. When talking with the real estate commission, a separate issue came up, but this ended up being an ancillary issue to it. Was a real estate agent was renting as a tenant, caused a bunch of trouble, and they were reported to the DCCA. And that agent's broker was asked, hey, did you review their lease when they signed up to be a tenant? And the broker said, no, why would I do that? I never review the leases that my agent signed as tenants. The real estate commission says, well, that's a real estate activity. You need to be reviewing those. You're supervising your agents. I don't know what to really say about that. I think there's some brokerage firms out there that have hundreds of agents. I don't think there's any on Kauai that are quite that big, but there are some here on Oahu that are that big. And I can't foresee how one broker or, even brokers in charge could supervise every single agent's lease and make sure that they're following every little rule and all these issues. So something to keep in mind, something at least to be aware of, so that if something does happen with one of your agents, you're aware that this could become an issue. But I don't know. I don't know what's going to happen with that. So
Andrew?
going on. Yep.
I have a question. And this came from Hannah. It says, now that we have an amendment form, thank you, which requires a broker signature, why would not require a broker signature on an addendum? Does it require a broker signature or not?
The amendment and addendum form have the broker signature on the top, like almost all of our forms do now. So those are for the drafting side. So the purchase contract, the page 14, is for the reviewing broker, the non-drafting broker. So if the buyer makes an offer on the purchase contract, the buyer's broker is signing off on the page 1 on the very top. And then on page 14, the receiving broker is the one who would sign off if it's being rejected, or if it's, they're reviewing it anyways. So for the amendment and the addendum forms, the broker signatures for the drafting broker side.
Hannah, did that answer your question? Okay.
Not really. So Andrew, what we find sometimes when we're contracting is that we add forms as the contract moves through escrow. And so the amendment form definitely needs a signature. The addendum form does not. So I'm just trying to figure out, why would we have it on one and not the other? Because you can still add things while you're in escrow, and you can amend things while you're in escrow, but we're only requiring a signature on one.
Well, I would also say that, let me pull them up to verify, to confirm kind of what you're saying. But there is a difference too in terms of the addendum. Okay, I see what you mean about addendum and amendment. One of the issues and I'll have to talk to the Standard Forms Committee. That was kind of made as I was joining the organization, so I wasn't that involved in the creation of those 2 forms specifically. But the addendums being signed at the time of the contract. So if the purchase contract, the rental agreement, whatever form it is that's being signed, the addendum should be being used at the same time as that other form. And so presumably, if the purchase contract has an addendum to it, that reviewing both brokers, the drafting broker should be reviewing both the purchase contract and the addendum at the same time. I think it's something that we can talk about at the Standard Forms Committee level, if that should be added on, that drafting broker signature. But then the amendment is something that's being done afterwards. So if the purchase contract's already signed, you're already in escrow, you're moving along, and then the amendment happens. Well, this is something brand new that's being created, so the drafting broker should be taking a look at it, versus an addendum that was made at the same time as the rest of the contract or the rest of the forms that were being created. That may have been the intent of the committee. I'll talk with them the next time we meet and bring that up. Does that maybe address it, Hannah?
Yeah, and I definitely see your point. It's just when we're practicing real estate, there are times where the addendum is used while the parties have been in escrow. So agents are, in certain cases, using the addendum post entering escrow. So it's a new document.
Okay. Yeah.
Andrew, this is Richie Richardson.
Hi, Richie.
The purchase contract has a section in it where you have to list your addenda. You itemize them. And you can't append an addenda without also changing the contract. Is that making sense? So you have to list all of your addenda at the time you draft it, an amendment to the contract, and I think this is what you said, comes after. We have a contract in place. We are now changing the terms after it's done so that we're amending it. That's what that's doing. That's my interpretation of it.
Correct. But I think I understand both what you're saying, Richie, as well as what Hannah's saying. And this may require more education on HAR's part, on Hawaii's part, you know, everyone's part, to make sure agents understand the difference between an amendment and an addendum, that to make sure that they're being used appropriately. But in the event that Hannah brings up, if they are being used, if the addenda is being used inappropriately, maybe we should just put on that line just as a safeguard too. So I can, like I said, I can talk to the Standard Forms Committee about that.
Thank you.
Thank you.
So the November release, we only have one form at this time. I'm not making any promises, but we do have one form for sure. We made changes to the rental agreement. It was originally supposed to come out in May, but then COVID. And so we decided not to burden all of the property managers who are already having a really tough time with everything going on by saying, hey guys, in addition to all these new things you have to learn and this eviction moratorium, here's also a new form that you guys have to figure out and make sure you guys know how it works. So we held off until November. So there's going to be a new rental agreement. It's not a major change. There's just a few tweaks that our property management people on the Standard Forms Committee wanted to make, kind of to make things easier for them. But like I said, no significant changes. We didn't throw everything out and create something new. We are currently working on the seller's real property disclosure statement. We're trying to make it easier. We're trying to go through and look at some of the questions that people have been having issues with over the years. I get a lot of calls from agents and brokers saying, hey, so what is this air compatibility use thing? That one, unfortunately, is just taken from the law, so we can't change that one. But we've been working through to make the contract a little bit easier for your clients to fill out. The other big form we've been working on is dual agency consent form. And there's some rumblings going around about some bigger changes in dual agency that may or may not happen. And we just got approval today. So today, Hannah was there, Karen was there, Julian was there. We had a board of directors meeting for the Hawaii Association of Realtors. And we got approval from the board of directors to create an additional COVID-19 form. So this would be not like the one we have right now where it's used during for a transaction. We're thinking at this time, and I can't make any promises on it, more of a disclaimer for during showings, both on the transaction side and the property management side, just putting some guidelines in terms of what our best practices. We've been looking at other forms throughout the country and throughout Hawaii and seeing what other people are doing. I know a lot of the smaller brokerage firms probably haven't had the time, energy, or money to go out and make these new kinds of forms. So any other questions? My phone number is listed there. You guys are welcome to call. I'm not in the office. We're still working from home, but that number still does ring to us.
Thank you, Andrew. Anybody has questions for Andrew or for Kim? If not, I have asked Kim if we could have her again a little later on in the year, and she's going to be doing presentations more tailored to categories like rental properties or agriculture, so condensing it so that we can get a really good understanding of what's going on. Any questions or concerns?
I got a quick one for Andrew. This is Mike Curtis. The other day we had a class and we were talking about dual agency disclosures. And then there was the need for multiple dual agencies where you have several agents in the same office with similar listings and several agents in the same office with potential buyers for like 3 condominium units. So there for multiple standard forms, multiple dual agents in the same office. Just as input.
Okay, thank you, Mike.
Anybody else have questions for either Kim or Andrew? Or myself, for that matter? Okay, well, if not, thank you. We'll be having our general membership meeting on August 11th. Our speaker is going to be Chip Fletcher, and he is going to be speaking on climate change. We are going to introduce the county people, so Kim, you're welcome to participate if you want to or not. Andrew, you are welcome to participate too if you want to learn more about.
I like Chip a lot. He's a good guy.
Okay. Thank you, everybody. Time to go off and sign off, and I'll let you guys know if we have anything more. This has been recorded, so we will be posting it up for your input at any time. Thank you. Thank you, Andrew. Thank you, Kim.